Hi, today we're going to look at budgeting. In front of us we have the 2009 exam, VCAA exam, and I'm going to do an example with you. Just keeping in mind 2009, they didn't do GST in budgeting, but our current study design does, so we're going to add GST where it's applicable. Now this is a really big question. It's out of 17 over about 20 to 30 marks. That's a big question. Okay, so I haven't got the first part of the question, but it starts off here saying the accountant uses the following information for preparing budgets for 2010. We've got our estimates, some balances. The bank balance was estimated to be $28,500 credit, and here are the questions. So the first part is to reconstruct the necessary ledger accounts to determine the estimated cash collected from debtors. That's worth 4 marks. So we have a debtors control here. Reconstruction means basically there's something unknown and we have to put in the information that we do know to find the unknown information. In this case, we're trying to find out how much cash was collected from debtors. So we know debtors control is an asset account. So put here asset, which means we know it increases on the left and decreases on the right. Now, because it's an asset, it should have an opening balance. So if we look at our balances, it tells us that it started with $80,000. So we're going to put the start of the month, and it was $80,000. We are trying to find the cash collected from debtors, so that decreases debtors. We're budgeting for a whole year, and that would be bank. So that's the unknown, that's what we're looking for. So always put in what you're trying to find, and then we'll fill that out later. So the information we're given is as so. We have to go through everything that affects the debtors control account. So the first thing is credit sales. Credit sales does affect debtors control. A lot of the times the most important thing about budgeting is that they give you a lot of information, so you have to go through and read everything really carefully and highlight the relevant information. So credit sales is 630,000. Now because we're adding GST, so we're going to do that. That would be 10%. Drag that. Okay, what else have we got? Bad debts. Bad debts are debts that we can't get anymore, so that would decrease debtors. 4% of credit sales, so we go equals 0.04 times the credit sales. That's that much. Discount expense is the discount we give to customers so they don't have to pay that much. So it decreases debtors control. Discount expense. That would be 2% of credit sales, so equals 0.02 times credit sales was 630. Usually in the question you have, it would specifically say, well, if you're wondering about GST, it should tell you it's 4% of credit sales plus GST, but in this case it doesn't, so we're just going to leave it as is. And none of these affect debtors control, and we're given the closing balance. So we're going to put the balance. Closing balance was expected to be 75,000. We add up the bigger side, so it looks like it's this side. remember how this is how you balance, and it's carried forward to the next period. And that's done. So for 4 marks, it would be probably 1 mark for the balance. The credit sales and GST would be 1 mark, and the bad debts is 1 mark, and the discount expense is 1 mark. All right, let's do the creditors control. Same thing. It's a liability account, so increases on the right and decreases on the left. Okay, so let's put in the opening balance, which was 45,000. And we're trying to find the cash we paid back to creditors. So that would decrease your creditors. It would be bank. So that's what we're trying to find. Other information we need, well, what's the relationship we have with creditors? We buy stock from them. So we're trying to find how much stock, let's say, we bought from them. Doesn't seem to give us anything. And there's not much we have to do with creditors. Usually they might give us discount revenue as well, but it doesn't seem to mention. It looks like there's not much more, and if that's the case, it's a trick question. They want you to reconstruct the stock control account first and then go back to the creditors. So let's leave that one here, and we're going to go down and do the stock control, and you'll see what I mean. So stock control is an asset, increases on the left and decreases on the right. Opening balance is 100,000. We're trying to find, actually here it doesn't tell you to reconstruct the stock control ledger, but in the answer book it supplies a ledger for you, so it actually should prompt you that you need to reconstruct the stock control figure first to help you reconstruct the creditors control. That's really tricky. So it looks like that's what we're looking for, how much they bought from the creditors. So credit purchases would be the thing that's we're reconstructing for here. There's always something missing. It's like an algebraic expression. Okay, so we've been given the credit sales, remember? So that would affect your stock because you're selling the stock. But we put it at cost price. So it doesn't actually say what the markup is, but it tells you cost of sales is $300,000, so we'll use that. Other things that affect stock would be stock write-down, $10,000, so that decreases it. Other expense, depreciation doesn't affect it. And looks like that might be it. And we have a closing balance here. Just looking for stock loss or anything like that, but I don't see anything. So let's put balance. It was 120,000. So at the moment this side looks bigger. So that means that we reconstruct the stock control account, even though the question didn't specifically ask us to, and we found how much they bought stock on credit, which means we now can do the creditors control ledger. So we start off owing the creditors $45,000. and then we bought stock off them of $330,000, which is what we found out, here. And then we'll add GST, which is that times 10%. And then we can balance it. Now remember, the question didn't seem to give us a discount revenue, otherwise you might look for that. Okay, so that's done. We've done, that was worth 12 marks, so we haven't done the rent revenue yet, but 5 marks was to reconstruct 2 ledgers. Rent revenue received, so we have a rent revenue ledger. It's a revenue account, so it shouldn't have any balance to begin with. Increases on the right, shouldn't really decrease. So let's see what they say. Rent revenue is $2,000 a month. We must rent out a room or something to someone and they pay us $2,000 a month. Nothing was owed at the start of the year, but by the end of the year, $2,000 was owing to us. So that's an asset because it's owed to us. So that means that during the year, we must have received 11 months at $2,000 a month. That's linked to bank. We would have received that. So $2,000 for 11 months is $22,000, of which it told us $2,000 was still owing to us. So that's an asset. It says here, accrued rent revenue, $2,000 estimated. So then we close it. So that year we earned a total of $24,000, but $2,000 is not paid to us yet. And we close it to the profit and loss summary. And that's done there. Next question, they want you to prepare a budgeted profit and loss statement. Now this is a 2009 exam and the terminology has changed, so that means an income statement that we know. So let's do a budgeted income statement. It's exactly as the income statement we've learned already, but it has the word budgeted in front, so these are all estimates. Begin with revenues. So same thing, we always go through the information we're given and make sure we don't miss anything. Credit sales, so that was one of the revenues. Doesn't seem like they have cash sales. Credit sales 630,000. Then you'd look at sales return, because we've learned that you might do less sales return, but in this case I don't think they had any. That would make it more difficult. So we'll go straight into less cost of goods sold, cost of sales, which was 300,000. Then we think about if there's things like freight in, but that doesn't seem to be, which would give us gross profit. That minus that. Then we look for stock loss or stock write down, which we had, so less stock write down, which is $10,000. That gives us 320,000. Called adjusted gross profit. Then we add other revenues. So we're looking for things like discount revenue, interest revenue, in this case rent revenue. So we remember we didn't have any discount revenue and it didn't mention any interest revenue. So rent revenue. Now which amount do we put? We actually received 22,000, but in that year we actually earned $24,000. So even though we didn't receive the $2,000 under accrual accounting, we still put $24,000. So put $24,000 here. Add that up. You have to put this total even though it doesn't have a name. Then we go right into less other expenses. So go back up, we have bad debts. I think a common mistake would be just not reading properly and leaving things out. Now remember, bad debts, you shouldn't have to work it out again. You've worked it out already. It's 4% of credit sales, so it's over here. So we can actually just go equal that cell.